This is a story about a trader who quit, but for the wrong reasons. And so I'm going to tell you a little bit of a story here, and then we're going to move on to the things that the market will do to try and put you off. So the essence of today's video is all about the market. Just always think the market is going to be doing its best to try and put you off. Doesn't matter what specific market is that you trade, the market is always going to be trying to shake people out. That's the core dynamics of the markets, and some people will get affected by that more than others. So this story, I'm going to go back to the S&P here. This trader was active in the S&P, and it doesn't matter about what the person's strategy was or approach. It doesn't matter. The point is that this trader allowed the market to win. And what do I mean by that? Well, let's take, it was like there was a few instances. There was this one here. I think there was this one here, this one here, probably this one here as well. There were several instances which provoked this. Essentially, it was when the market would start consolidating. So the S&P, when it would consolidate, he would build up a position during the consolidation. Nothing wrong with that. But he was trying to trade with a really tight stop loss on it, because in his mind, if he could trade with a really tight stop, then he could put a bigger position size on. So the tighter the stop, the bigger position size. And that's, yep, that in principle is absolutely fine. Nothing wrong with that at all. Of course, the tighter the stop, then the bigger the risk of a stop out. And again, nothing wrong with that, as long as you're okay with it. But what happened to him is it happened several times. So he got stopped out during this, he got stopped out during this, but to be fair, the S&P rolled over there anyway. But during here, he accumulated a position, got nicked out only for it to go higher, and over here got stopped out only for it to then, okay, came down a bit, but then went a lot higher, and he missed out on the next moves. So he had anger issues as well. So he would get angry at the market. So, and frustrated. Now, if you take frustration and anger and direct it at the market, that's not going to solve the problems you have. All that's going to do is create baggage that you're going to take into the next trade and the next trade. So he'd get frustrated, get stopped out. Oh God, then get into another one, and then it culminated wherever it was. Probably after this consolidation back here, when was that, December, and then price came down again, and he just allowed the market to win. There was nothing wrong with buying in consolidations after an up move, because a lot of the time they will continue to go. It was his choice to trade with a very tight stop so that he could try and have a bigger position size. So, but he just allowed the market to get on top of him, and that frustration and anger, he wanted to blame something. So he was blaming the market rather than blaming himself. So not that necessarily, as I've already said, that he was doing anything wrong. If you want to trade with a tight stop, it's fine. It's just that, you're going to have, plenty of stop outs, but then when your winners come along, you'll get a great risk reward. But you've got to maintain a good mindset for when those winners, and patience for when those winners do come along. So the point of today, and it's a shame that he's walked away from the markets, because overall he's not overly doing anything wrong. If anything, just widen his stop going forwards, and it'd probably be fine. But again, he didn't want to do that, because he wanted to try and do what? Make as much money as he possibly could on each trade. So that desperation to succeed was at the core of it. And again, there's nothing wrong with having a desire to be, to accelerate your account faster, as long as you have the mindset to deal with the frustration of having, getting stopped out because you've got tighter stops. So my point of today's video is I did a live broadcast on Thursday here on the channel, I'm actually recording this video on Friday afternoon. But my point is, the market is always trying to get at you. It'll get at you if you're a fear-based trader. So if you have a couple of stop outs and then you hesitate through fear, all of that sort of stuff. If you bank your profits too soon and then you only to see the market fly a lot further, the market's constantly trying to work at you. So if you picture the market like the devil. Now, can I do a... Oh, look, there we go. We've got a horn there. Oh, my word. Look, this is not bad. Wow. I'm impressed with myself. I am not an artist whatsoever. I don't know what the devil's eyes look like, but anyway, this is going rapidly downhill now with... yeah, he's got to have pointy teeth, hasn't he? So, anyway, so... See the market is like the devil, and he's trying to put you off. It's a game. The devil, the market itself, it's always trying to get at you. And the people who are most vulnerable are the people who can't maintain their emotional range. So when I talk about emotional range, you might have people who get really pessimistic and despondent at the lows, or really euphoric and overconfident at the highs. That's a big emotional range. We don't want to have a big emotional range. The bigger your emotional range, the more susceptible you are to getting affected by the markets. So the smaller your emotional range, okay, you just brush off the losses. You brush these things off. You've got to work on it. You've got to work on your mindset. But if you do continue to work on your mindset, then you learn all the tricks and tips to brush off those things. So for that chap, what was it that he was doing? It's okay with trading with a tight stop, but he's got to work on the rejection side of things, and the fact that he's got to accept that he's going to have more stop outs if that's what he wants to do. So therefore, what does he have to do? Keep telling himself, look, this is what I'm getting because I'm having tighter stops, but if I want to continue doing this, it's fine, but the winners will be fewer, but when they do come, there'll be a really big risk to reward. So, and if he uses that self-talk, then that's okay, and he's more likely to maintain a lower emotional range. Otherwise, he can then use self-talk and say, actually, yeah, I'm not comfortable with as many stop outs, so I'm going to widen my stops, and I'll by default have more winners and fewer stop outs. So again, he could have worked with that. And as long as you use that sort of self-language, remember, it's just the market trying to get at you. You can't blame the market. The market is just a mechanism. And so once you can laugh at the market, then you don't get frustrated with it. If you don't get frustrated with it, it doesn't affect your next trades, and it doesn't mean that you become a statistic like that chap who's given trading a go for a year and then quit because he didn't like the results of effectively his efforts to try and have such tight stops. So he wasn't willing to take ownership of it. So there you go. There's a bit of a story there. But what can we take from it? Like I've already said, doesn't matter what your style is, the market will try and get at you. So work on your mindset. Use self-talk, justify it to rationalize what is actually going on. If you start blaming the market, oh, the market's rubbish, the market does this, the market does that, you're going down the wrong path. I spend an inordinate amount of time talking about mindset in my community, in the trading room, but it really is the most important part of trading. There you go, is my thoughts for the weekend. If you've got anything that you want to confess or where your mindset is affected, by all means let me know, and I'll do some specific videos on trader mindset in the weeks ahead.